Welcome back, investors. Jake here. Hope you're doing well today because the financial markets are having a full-blown panic. I don't think we've seen a single day drop this large since the February-March 2020 pandemic crash in the market. Currently, the Dow Jones is down 2.82%, the S&P is down 3.5%, and the Nasdaq is down 4.4%. So in this video, let's go over quickly my portfolio and positions. Spoilers, guys, I haven't sold anything. And then we'll cover why is it dropping so dramatically today, and then what is my game plan? What am I doing in response to this decline in the market? So when we look at my Schwab portfolio, this is the public account that I share with you guys. Year to date, I started with $60,000 and I'm down $14,700 or about 24%. That's a pretty dramatic drop, guys, but considering that I'm 80% leveraged in this account on call contracts, only a 24% decline given the sell-off in the broader market, that's a pretty good performance in my opinion. And the reason why, guys, is because all of the companies that I've chosen to be in the last year or so are profitable companies with reasonable evaluations that are doing stock buybacks and growing their dividends. These are not the stocks that are collapsing dramatically. The high growth stocks with high price to sales ratios and no earnings, those are the stocks that are falling 50-60%. So when we look at my positions, I've covered extensively HCI and why I'm down 45%, but my call contracts on Apple, Berkshire, and General Dynamics are still positive given the dramatic sell-off in the broader market. HCA is basically flat, and Texas Instruments and Capital One are down. But I'm not worried about any of these positions. I'm not worried about losing any money on these contracts because the expiration dates are so far in the future. These contracts expire January of 2023, 2023, 2023, 2023, 2023. Capital One's the only one that's different. It's June of 2022. So all of these companies are going to be reporting their earnings in the next week or two, which will cause this account to jumble. I'll reevaluate the fundamentals at the time once I see their quarterly earnings reports. But even if I choose to hold, guys, I'm going to get another 3 quarterly earnings reports from all of these companies. They're all profitable. They're all solid brands. I believe in these companies. So in response to the selling this week, it doesn't bother me. I don't care. If you are a long-term buy and hold investor, especially an index fund investor, don't panic sell. Don't sell at a loss after the market has already gone down 10%. Definitely reevaluate your positions if you're not confident in individual stock picks that you've chosen. But in response to a market sell-off like this, what should you be doing? The best advice I can give you is to do nothing. However, doing nothing on YouTube doesn't drive clicks. What drives clicks is to tell your subscribers to panic sell after the market has already gone down 10%, and to FOMO buy the market or individual stocks after it's already gone up huge. Just as an example, Meet Kevin last Friday announced that he was selling out of all of his stock, option, and crypto positions, about $20 million worth, and now he's actively trying to short the market. I just don't get this kind of investing philosophy where you could spend 2 years promoting and hyping the worst forms of speculative investing, GameStop, AMC, Dogecoin, Palantir, companies with no profits, ridiculous price to sales ratios, and at the first sign of trouble, you cut and run, and you leave your subscribers, high and dry. Everyone trying to diamond hand these positions right now, Meet Kevin is shorting all of these. He's shorting the entire market. So he's betting against you. He's causing your investments to go down. So to me, this doesn't make sense, but he's got 1.78 million subscribers and I don't. So what is driving the market red today especially is that the European markets were down sharply. all of the world's financial markets are intertwined, so when Europe trades down, usually the American markets will also trade down. And what's got the world spooked is that the US State Department has evacuated or ordered the evacuation of diplomats' families from Ukraine. They wouldn't do this, guys, unless the situation there was very serious. Additionally, Israel has made plans to basically evacuate Ukrainian Jews in case war breaks out. Israeli intelligence usually is the best in the world, and they wouldn't do this unless they were pretty confident that Russia is in fact going to invade the Ukraine. I don't want to get into too much geopolitics in this video, but 5 or 6 years ago, Russia took Crimea, and Crimea doesn't touch Russia. It's a peninsula, basically, and they had to construct this bridge to connect it. So what they want is they want to have Crimea connected to mainland Russia, and they can only do that if they seize more Ukrainian territory. So going down the center of the country, there's this Dnieper River. More than likely, they could just be greedy and seize everything east of this river and say, this was always part of Russia, this is Russian territory now. Or they could just take this southeastern region part to once again have Crimea once again be part of the USSR or Russia or whatever they think they are today. Speculation is that Vladimir Putin wouldn't do this until after the Olympics. The reason why is because China is hosting the Winter Olympics between February 4th and February 20th. This would be very embarrassing to the Chinese people and the Chinese government if Russia caused this international event days before their Winter Olympics were to be held. So if there is going to be war, if the Ukraine is going to be invaded by Russia, this probably might not happen more towards the end of the Olympics. That's the speculation. So let's talk about this drop in the S&P 500. Looking at SPY, it was as high as 477. And we're in correction territory, guys. If the market doesn't turn green over the next couple hours, the S&P will finish below 10% from its high. So this is official market correction territory. So what can we do to evaluate what's going to happen in the short term? And all we have to do is go back to the last time we had a correction. This was the pandemic crash going back to March and February of 2020. So SPY, or the S&P, was at 338. It dropped down as low as 228, and the market lost 30%. However, how long did it take for the market to basically get back to all-time highs? The decline started February 20th, and basically the market was back at all-time highs by August. That's roughly 6 months later. 6 months later, after everything that was going on, we were back at all-time highs. But what I want to highlight for you guys in this video is that the mega cap stocks, the biggest, most profitable, most successful companies in America, I'm talking about FANG minus Netflix. So Apple, Microsoft, Facebook, Google, Amazon. These stocks, when you look at the crash, all recovered much faster than the broader market. So if the market started selling off here when Apple was at 78, it basically recovered by May, 2 or 3 months later. Same thing with Microsoft. This one recovered more or less 3 months later. Facebook also recovered basically 2 months later. Google maybe took the longest, but it eventually did recover back at all-time highs by June or July. And then obviously if you look at Amazon, it's like the pandemic never even occurred at this time. But once again, everybody was predicting that everyone would just be sitting at home ordering stuff on Amazon. So what I want to argue for you, if you're looking for short-term trades, short-term buys, go back to these mega cap stocks. The fact that Apple is down 13% from its high, Microsoft is down 18% from its high, Facebook is a little bit different. People hate Facebook and it's constantly having all these scandals, but from its high last September, it's down 23%. Google over the last month is down 15%, and Amazon is down 25%. What I'm arguing for you in this video is that if there is serious economic trouble, if investors who all have money don't know where to put their cash, what did they do 2 years ago? 2 years ago, they said, we don't know the future of the airlines. We don't know the future of the energy stocks. We don't know the future of the banks or the consumer stocks. So we're just going to dump our extra money in big tech. The reason why is you can be pretty confident 10 years from now, Apple, Amazon, Facebook, Microsoft, they're still going to be profitable. They're still going to exist. So the mega cap stocks with the strongest brand names become a reserve for when people have money and they don't know what to do with it. So my prediction, given this correction that we're currently in, is the first stocks to recover from these dramatic declines will once again be FANG minus Netflix. So it is going to be the mega caps. So if you're looking to park your money somewhere or potentially rotate out of a bad position and you want to know where to go, I think I'm going to start trading debit spreads on these big companies, Apple, Microsoft, Facebook, Google, and Amazon, because once again, strongest brands in America, and I think these will be the first to recover if we do enter a new bear market. But that's not what I'm going to do today in this video. For those of you who saw my video on Friday, you know in my Fidelity account where I do have extra cash, I actually bought 4 call contracts with an expiration in March at a strike of 445. Full transparency on my channel, guys. These contracts are down because SPY went down 3 or 4% today. So I'm currently down 40% or $2,300 on these calls. Now, am I gonna panic and sell for a loss? No. I've still got this extra cash here, $19,000. I'm confident the market is going to have a bounce. It's going to have a snapback. All of the technical indicators that all of these large funds and institutions are looking at currently are screaming that the market is oversold and you got to buy back in. You got to hold your nose and buy at these local lows. I'm not saying there won't be a longer downturn in the market over weeks and months, but when something is this oversold on a daily time scale, the large funds, the swing traders, will buy back in temporarily. So I'm confident that I can still make money on all these contracts, but if you watched my dead hand challenge earlier this year, you know I gotta double down. So that's what we're gonna do. We're gonna go to the option chain for SPY for calls. Once again, expiration date of March 18th. This is in 53 days. And I'm going to choose the strike nice round number here out of the money of 430. And I did it, guys. I doubled up to 8 contracts with a cost basis of $12,549. Once again, if the market bounces back 2% tomorrow, then I will just sell everything for a profit. However, if the market goes red again tomorrow pretty dramatically, like it drops another 2, 3, or 4%, then I'll probably double up again. Once again, I'm feeling confident in the short term I can survive this and turn a profit in my Fidelity account. This is not financial advice. This is incredibly risky what I'm doing. And of course, guys, if I blow up my account and I lose all my money, I will definitely make that video for you. The naysayers out there can tell you I told you so, and I will happily respond you are correct. If you guys like these kinds of videos or you want to support my channel, give me a thumbs up. Easiest way to support me. If you have any comments or questions or have any opinions on what's going on in the world today, let me know down below. I love hearing from you guys. Till the next video, take care.